Hello everyone, Mehdi Photocall for mine. And so today we're going to see the 5 biggest popular stock traps in the market right now. And needless to say that I'm definitely not buying these stocks at the moment. So what are those? First, Palantir. So yes, Palantir is, I think, one of the biggest traps for new investors, especially in the market. So why? Because Palantir is first a great company, a great software company, which has understood that ontology was really the fundamental key of building great software for the AI era. And so they have been able to grow significantly in the new AI cycle, thanks to their AIP bootcamps, for example, and they are now delivering, thanks to Foundry and thanks to AIP, a really great solution for enterprise. So I think Palantir is a great company by itself, but now at $150 per share, the company and the valuation of the company and the stock is totally disconnected. So it makes no sense for anyone at this level to buy Palantir. Why? First, because there is a little price appreciation to actually have in the coming years, because all the growth has already been priced in. So very dangerous setup today for Palantir. And then second, the fact that you might think it's a great company, so that's why it's valued this way. Actually, it's a totally fundamental mistake, because the valuation is going to go down. That's almost a given. The stock cannot continue to actually grow like this, and the valuation is going to come back, because at 110 times sales, it makes no sense for any investors to actually stay in this name. And so what's holding Palantir at the moment is mainly the momentum behind the stocks, and most likely gamma squeeze on on the name thanks to options. But once the music stops, it will be very dangerous for any investor still in the stocks, and I think that it will mainly burn those new investors who still think that because Palantir is a great company, it's still going to be able to sustain this overvaluation. Okay, so now second on the list is Apple. So Apple is also a huge trap, I think, for investors. Why? Because Apple seems safe. Apple is one of the most profitable companies in the world, so let's not be mistaken on that. So it has been doing a lot of buybacks recently, so a really good buyback years for Apple, and also a small dividend yield. But the fundamental issue for Apple is that it's definitely losing an edge on the AI part and has not been able to innovate anything for the past few years. So even if we look at the Vision Pro, for example, the latest quote-unquote innovation, it has been very hard for Apple to actually come into the market with really innovative products which are going to sustain their leadership in terms of hardware and software. But they still benefit from their incredible products, so like the MacBook, the iPhone, and the AirPods. So we all know about Apple. But I think where it's a huge trap for investors that, like today, Apple is not having a lot of growth in terms of revenue, and we are not going to see a lot of growth going forward. But if you look at the valuation, we have a valuation of more than 30 times price to earnings ratio, for example. And so this may not continue in the future. So it's very dangerous for investors who think that they are in a very safe name. And we have seen this before with like Nike, with like Estee Lauder. Everybody thinks that they are in a great company, very safe, but still at very high valuation. And you just need like some kind of pessimism in the name to actually lose 20–30%. And so I think this is why it's very dangerous, especially given the fact that in China, one of the biggest markets for Apple, there is a lot of competition, and the Chinese market might actually be lost for Apple. And so if you're still in Apple, I think that you have to ask yourself the right questions. Do you really think that Apple is going to continue to grow and to innovate, to be able to sustain its leadership in the different categories they are in? So the third popular name that investor might be into a trap is Tesla. So why Tesla? So first, Tesla is very ambiguous in what is their core business, basically. So some see it as a car company, some see it as an AI and robotics company with a lot of growth ahead. But why I think it's a trap? First, because especially given the valuation today for their main business, which is basically today the car business and a little bit of autonomy business, So there are a lot of expectation and hope baked in this name, but basically the current business is not delivering anything close to the valuation that we are seeing in Tesla. So as a car business, and if it's still the main business going forward, I think that Tesla is widely overvalued, and it's going to be very difficult to actually sustain this type of valuation going forward if we are seeing difficulties in the other business, like in autonomy with robotaxi, robotics, and energy. And so let's talk about a little bit of these new businesses for Tesla, which promise so much growth. And so while in the car business and in EV industry, at the beginning, they didn't really have a lot of competition. But we've seen that a lot of competition came out of China. And so in these new businesses with like autonomy and robotics, people think that only Tesla can do it. But it doesn't make any sense, because what we are seeing today is that even in those verticals, there is a lot of competition. So first, on the robotaxi side, Tesla is going up against Google with Waymo and Amazon with Zoox. So it's not like a blue field where only Tesla is actually winning. Definitely not. So Tesla has a different approach with only cameras in their vehicles, given that Google, for example, is using LiDAR, and the same for Baidu in China. So it's a different approach. It might or might not work. I'm not here to debate that, but just to show you guys that there is competition in the market. And so saying that Tesla is going to take all the profits pool in this industry is actually pie in the sky, and this might definitely not happen. So you have to be very careful about that. And second, for the energy business, we've seen that it has been very reliant on interest rate, and so it may or may not actually develop as a very profitable business for them. But let's see what's going to happen. And then for the robotics part, I think that a lot of people have a lot of hope for Optimus, because indeed it has a lot of promises and expectation in terms of huge TAM in the age of AI. But we've seen that there are already like big competitors, either like in the US, but also in China. So like in China with Unitree, I think that this market is definitely closed for anything about Tesla robotics. But in the US, we are seeing also like, well, the Boston Robotics, even though they are a bit different, but still, like for example, Google with like DeepMind Robotics is also already into the game. We are seeing also with like companies like Amazon, like in their warehouse, and also for the delivery, definitely having a lot of competition for Tesla. And we're also seeing other like startups which are coming so like into the game, and very heavily subsidized by venture capital. So what I'm trying to say is that these new business, they might not be as profitable as you think for Tesla. And if it's the case, the valuation of Tesla is definitely not warranted. Then the fourth name I think is a big trap is Nvidia. It's a trap at this level. I don't think that it's a trap at $80, but at $160, $170, it's very dangerous to be in this name. Why? Because I think that everybody has seen that Nvidia has a leadership on the high performance chip market, and this is going to continue. We are seeing more and more demand for compute, so definitely Nvidia is going to remain one of the biggest companies in the world. But having said that, there are a lot of shady things, I think, especially regarding their business with China. So definitely what we can expect is that for any type of weakness we are seeing with China or with the hyperscalers, that the profit pool for Nvidia is going to shrink very quickly. And the other shady thing is the way they are using companies like CoreWeave, for example, where they are kind of like round-tripping revenues. Their main customers are people selling Nvidia cards. There is a kind of weird schemes around Nvidia, and so this makes me very wary of Nvidia going forward, because we can definitely see pullbacks for like minus 30 or even minus 50%. And so one other thing that you have to take into account and that you need to be very careful is the language used by the hyperscalers, because they are the ones who are going to tell you that they might not need as much demand from Nvidia as what we might think. And so Nvidia has a lot of expectation baked in already, and I think this is a very dangerous name to actually get into at the very moment. So the fifth and last trap, I think, for popular stocks in the market is MicroStrategy or strategy. So why is that? The main reason for that is because it's highly tied to Bitcoin and it's kind of a leveraged version of Bitcoin. And what we've seen recently is that a lot of companies are replicating this kind of Bitcoin treasury strategy, and we are even seeing now Ethereum treasury strategy. And so this is kind of very interesting, and I think that MicroStrategy is obviously the most prominent company doing this type of strategy. And why it's a trap is because like today we are seeing a lot of euphoria and a lot of positivity towards Bitcoin and towards crypto in general. But most likely like this is going to subside, and we are going to see like another phase into the cycle where Bitcoin is going to actually go down. And so being in MicroStrategy, I'm not even talking about being in Misty, which is a whole different game, but just being in MicroStrategy is actually very dangerous, I think, at the moment, given the volatility in the name. And so we are today at a level where we see a lot of positivity and a lot of expectation for MicroStrategy, and there is a lot of risk into the name. Not saying all the different, I would say, risk links to the fact that they are issuing more and more equities and they are issuing more and more bonds to buy Bitcoin. So definitely, so if you're in MicroStrategy, I think it's a levered version of Bitcoin. So I think that we've reached a level. So in the Bitcoin cycle was like $120,000 per coin, which is actually pretty high for this cycle. And we might need to have some kind of digestion of these crypto waves. We are seeing kind of a bubble in the stable coins and the altcoins sphere, which is a bit different, but this is going to have effects and impacts on the Bitcoin, I would say, industry in general. So definitely MicroStrategy at the moment is also a big trap. If you really are a Bitcoin believer, I think Bitcoin itself is a better strategy than MicroStrategy at the moment. Okay, so that's it for the 5 biggest popular stock traps, I think, in the market right now. So as we've seen, like, so Palantir, Apple, Tesla, Nvidia, and MicroStrategy, they have benefited a lot from a lot of positivity and euphoria in the market at the moment. But definitely, they are very dangerous names right now. And so I would say that they are kind of traps, especially for new investors coming in at the moment. So be careful in the market, do your due diligence. And if you want other news about the Japanese, Chinese, and US markets, so please check my other videos on the channel, subscribe, and I see you in another one. Bye.